All right, so I am recording the trades that I took on July 29th, and it is 2 days after the FOMC meeting, and the market has been on a bear run. Not a bear run, a bull run. Excuse me, I'm still drinking coffee. So we see here that the market is attempting to reach the previous highs of early June, when we were at 42.05.75 was the early highs. And we've been on a full bull run for the past 3 days. Today's candle closed slightly above on the same level as early June, late May's highs here that we can see. And I'm going to get right into going over these trades with you. So here we go. All right, so starting from the beginning, my initial thesis was to go short. And you'll see here that I was watching as the market opened. So when we opened up at around 8:30, we had a huge, massive move all the way up to about 30 points. We just kind of spiked up, and I was watching how we moved. Now you'll see here, like this bottom candle right here is a very long wick, so that indicates bullish movement, right? So that means that buyers are buying everything up and we are moving upward. But the thing that was concerning to me was we hit this level around 41.05 a couple times. We hit it in the overnight session, and it looked like we were going to reject off of it. So as I was watching the market open, I was watching from about 8:30 when we had our massive run up, and then I was watching everything kind of consolidate as I was looking to put on a trade. Now, my thesis was bearish initially. But looking at the action that we were having, it looked to me like we were hitting kind of a consolidation point, where it was a consolidation of a natural pullback down into the 10 EMA, and then we were bouncing up off of it. So we were here at 4,000. We were holding that level really nicely, and then it seemed like we were selling off. So to me, we had ran up all the way up from not 4,000. What am I saying? My bad. It's 4,100. So we were holding that 4,100 level, and then I noticed, okay, we were spiking up. But what I don't like about the market right now is that continuation to the upside has not been proven. Like, we don't get really strong bull moves. Now, despite that, the bulls have been buying the dip, and they have been sustaining value. And at this point here, I'm switching my thesis to a bull move. I'm estimating that we could go up to about 41.20, and I usually look to play at least 6 to 10 points if I can get it, right? So my reasoning for moving to a bull thesis at this point was there was that huge wick down, meaning that everything was getting bought up. The bottoming out at 40.85 was pretty sustained. And here we have on the 15-minute chart, we have 45 minutes of straight bullish activity. Even though it's bullish and the volume's slightly decreasing, the cumulative delta here was still increasing. So that gave me confidence, but I wanted to see us get out of this consolidation area on the lower time frames. So when I switched back to my 2-minute time frames, I saw that, all right, this is an area of crazy consolidation. Then I looked to the VIX, and I noticed that we're moving down at VIX. which is good for bull moves. So VIX is the inverse of whatever the market's doing. So if VIX is going down, that means that the market is going up. If VIX is going up, generally that means that the market is going down. And with the VIX being so low at 21, normally I like to see the VIX stay under 23 for bull moves. With the VIX being so low, it just kind of gave me the confidence that we were going to have a small pullback, and then we'd be able to make another move up into that 41.20 area, which is what I was targeting. But the trick would be to not get chopped up in consolidation, which is so often what tends to happen with me, because I create a thesis, but then I am working on exercising patience, right? So at this point now I've entered the trade. I've said, okay, here we go. We've hit the 10 EMA, we're bouncing upwards. So what I did was, instead of leaving my stop where it was, I moved it up, right? And this was done because I was afraid, honestly. I didn't want to lose any money today. And sometimes when you play not to lose, you don't really win. So I should have left my stop where it was originally, on top of that area of consolidation, and not moved it. Because what happens with these moves is, a lot of times the stock, I feel like the S&P, when you're playing futures, it needs a little room to breathe, right? Like, you don't exactly know where it's going to go back to and then bounce. But everything was looking positive at this time. And in this trade at this time, I think I was up maybe about $300. So that's why I just kind of moved the stop up to above break even. And then I was trying to move it again. As you can see here, I'm moving it. And then I just got stopped out, right? Because it didn't even come back to break even, but I had moved it up too soon. And I didn't give my trade time to work. So at this point, I think I was maybe up $70. And I said, all right, I'm going to get back in, because everything is signaling that I am in the right spot here. So I moved my stop, and what I did here in this area, as I'm kind of watching, you've got an up move followed by a natural tiny retracement, and then you'll see here that I realized a fraction too late that I needed to give my stop a little bit more room. And you can see that failed to modify order meant that I was out, right? So, because what happens is, so often is, you can see here, it's moving 6 points between 411 to 41.05. That's a 6-point move. Had I given myself a wide enough stop, I would still be in the trade. But now at this point, I was getting a little concerned that my thesis was wrong. So I was leaning towards going short. But I wanted to see if this was just a retracement, a small pullback into the value area, which at this point it kind of looked to me like, all right, we're just having a small pullback. But if we can hold above that 41.05 level, then I think we're good, right? So I wanted to give myself enough room to start working out on this trade. Now, my initial thought was we could get to 41.20. And that's where I was targeting. But then I got a little bit more ambitious, and I was like, no, maybe I think we can go to 41.25 or 24, something like that. I never take my trades at psychological whole numbers, because that's where a lot of traders are looking to take their trades, right? They'll target 41.20, 41.25. I don't do that. I target like 41.24.75 or 65 or something like that, right? I'll take a little less to make sure that my trade's going to work for me. And here you can see I kind of scratched out of this trade. Again, my stop was a little bit too close, but I said, all right, let me get back in, because I really believe that we were just experiencing a small pullback and we were going to run up, because everything was pointing to volume was looking good, cumulative delta was holding, and I felt we were able to get another push up. Since I missed this crazy bull run up that happened on the open, because I don't play the open. I wait. I like to give the market at least 30 minutes to figure out what it's going to do, and then I'll come and get my piece of the pie. So here the trade's working. My stop out before, when I was in a really good spot, was because I got a little bit greedy and scared, right? So now I'm debating whether to wait to move my stop or to give this a little bit more room to breathe. So here I'm up $125. I moved the stop immediately to break even, because my thinking is, if it goes against me again, I am not going to take another paper cut loss. I am going to simply get back in, right? I was going to give this trade a couple times to work. So I'm waiting for it to work. Right now, it's probably, I'm in the trade for like a couple of minutes here. Everything's looking good. It's above this little crazy yellow consolidation area that was happening. So now the trade's working, right? It's working for me. And I'm just waiting to see if it's going to hit my target. So my target was 41.24, set 20.75, I believe. And I like to set alarms to kind of help me know that I'm going in the right direction of my trade. And at this point, I was up $500. So I was like, if I break even, that's fine. But my goal was to make money today, right? But again, whatever the market gives you, it's a gift. You can't think that the market owes you money today. You just can't approach it like that. And the trade's working. So we're at that critical level of 41.20.25. I'm thinking, all right, maybe we've got a couple more points in us. Maybe we don't. But at this juncture, I'll be happy with what I get, right? So now we hit up to that 41.21.75, 41.22. We're hitting it. I'm kind of having concerns that we're going to make those extra 2 points to get to 41.24.75. So we hit 41.22. We kind of bounce around. We're at 41.21.50. We bounce around a little bit more in that level, 41.22.50. And at this point, I am making the decision that I am up around $850, and I'm gonna, now it's 9:25, I'm gonna close this trade, because I don't really think we have any more to go, right? So my sales price was 41.22.75, 2 points off from my initial price target. I know some traders say that they do not move their targets. They either sell at target or sell when they get stopped out, right? I don't operate like that. I figure a little bit less is still something, right? So as you see here, what's happening now, pretty much about 6 minutes later, after I've exited the trade, is we've now moved down to the 41.15 level. This shows me that we are now probably going to go back to that consolidation level. And at this point, I'm looking at the volume on the 3000 tick chart, and it's a really killer pattern. As you can see here, the times kind of match up. Where we were going up, we hit that 41.23 level, we went down, we retraced, and then we went back up. And this was the area that my trade was in, right? Between that 9:30-ish area. And then, as you can see, as the day progresses, we never get back down there. And this is these are my trades that I've done, and you can see the 5 trades that I did, and my net profit for the day was $6.58. So I consider that a good day, and I hope you like this. And if you like this, I hope you consider subscribing to my channel as I share my trading journey with you. Thank you for watching. I appreciate it.